Hey everyone, my name is Simon Misiewicz. I'm from Optimise Accountants and I'm going to be hosting tonight's Q&A. I just noticed my video is not working, so hopefully it's going to come up. Hey, here it is, finally working. Good evening to you, and what a lovely summer's day we are having too. I've decided to take a day off today, so I'm probably feeling a bit more refreshed and a lot more alert as well. This night, as usual, on this wonderful Monday evening, I'll be breaking it down into 3 sections. The first section is in the news. So we're going to be doing the in the news bit. And then after that, we'll be doing the client FAQs as well, which I'll be sharing with you on my screen. And then after that, we'll be going to FAQs. So if you have any questions whatsoever as I go into tonight's session, then it's up to you to ask those questions in the comments box, maybe down below or on the side, depending on which way you're looking at it on the video. So then you could type in, I'm showing you how to type. There you go, just in case you didn't know, that's how you type, apparently. So make sure that you do go onto the comments box, add in any comments. And by the way, all the way through this video, if you like this video, give it a thumbs up, just to let other people that haven't watched it live tonight, as you're doing, to join in the party as well, but at a later date. I'm just going to look for my narrative for tonight. In fact, have I got it here? I'm just going to share my screen, incidentally, so you can see exactly what I'm trying to do with you. So let me just do that. I can do slide share and then start screen. Okay, let me just do that now. Where are you? So I've just lost my screen also. Okay, let's do the share, and we're going to do on the PowerPoint first of all. Okay, so here's Monday Night Live. Good evening to you all. I've kind of going to be doing in the news in this section. Then we'll be doing client FAQ, which is what we've been asking, and then it'll be FAQ for you. So let's have a look at what's been in the news then. And what I've done, which is slightly different to ordinarily, a couple of weeks ago, I changed the format, so it's a little bit more stylized and a bit more to my own personal standards. I'm just going to get to that now so I can share a new screen. So let me just go to new share, and I'm going to go to Google, where everything seems to land. Here we go. So if you're interested in the news, you can go onto our website now and go to www.optimiseaccountants.co.uk. And every day I aim to get, I curate lots of articles from newspapers and so on. And on a daily basis, I will then publish that out. And that will go onto our website. So www.optimiseaccountants.co.uk. I'll also send it out to Facebook. I'll also send it out to Twitter. There's my little bird flying away. I'll also send it to LinkedIn. Got nothing for that, unfortunately, apart from LinkedIn. LinkedIn, there we go. 2 links for you. God, dear, how desperate am I getting already this evening? It is only going to get worse. It is just going to get worse. So apologies for that. But this is curated for you, so you don't need to go through all the newspapers and articles and whatever else. I have done that for you. So there is a section, funny enough, if you want to subscribe to this newsletter, you can do so. Just type in your email address, type in the word that where it says there, and then press subscribe. I don't bombard you with other marketing. If you like that piece of marketing, as in curating of newspaper, I won't bombard you with anything else. That is the promise I make to you. So don't feel that this can be used to other things. It does say newsletters, but to be fair, the newsletters is just the newspaper articles. Interesting enough, I've just noticed that we've got a couple of videos there as well. So we have not just the articles on this thing, but we also have videos. I've got, funny enough, buying the right property investment. So that's on our YouTube channel. They got Samuel Lees. They got Samuel Lees again. Then you got Samuel Lees again. There's a trend going on here. And a few other things that's going off as well. Oh, there's even Simon Misiewicz there as well. So there's quite a few videos that I always put onto this as well. So it's really nice encompassing of other people's stuff that is useful, interesting. So have a look at that. But in the meantime, what I thought I would do, and like I say, if you're interested in anything I've said tonight, or you think, oh, what's he mean by that? Or I've got a question about that specific point in terms of what's in the news this week, then please, please, please do put in the comments box your comments or your questions or even your rant. You can find me ranting again tonight. I can't help it. I can help it, but I don't want to help it. I think that's a truism. So yes, so let's go into the newspaper articles then that I've been picking up this week. So the first one is buy-to-let costs of mortgages basically are falling. So whether that's mortgage interest rates or that's the arrangement fees that you may have, they are all falling, as you can see there. So some of the interest rates are decreasing. And we're not just talking about decreasing from a individual perspective, but we're also seeing a interest decrease from the limited company as well, which is a huge, huge good sign for all buy-to-let investors. We've all had a lot of downward kind of margins being squeezed because of the legislation changes, not being able to pass on the letting agency fees, and we're absorbing those. Licensing for HMOs, for instance, we've been marginalized. Section 24, let's not forget that one. So we've got a lot of issues and pains that we're going through. I'm just holding onto my bottle of water in case you're wondering what I'm doing. Yes, I have got water, by the way. Yes, it's my weekly thing. By the way, you never see a news reporter doing that as I've just done it. It's really bad, isn't it? Maybe I need to professionalize myself with an optimized cup instead. Do you think I should do that, or are you happy with me just drinking like some sort of oath? Anywho, let's move on from that. So yeah, so good. Maybe there is some sunshine on the horizon with falling mortgage interest rates. So that's a good piece of article that was from the moneyfacts.co.uk, and that came out from Nigel Woosley. So the other one that I picked up was from the Times, just to spew things up, and it was talking about Birmingham. And it was interesting because I just came from Birmingham the other day. There's so much developments going on in Birmingham itself, with a new tram kind of development going on there, huge buildings going up as well. It feels like between Nottingham and Birmingham, there is the most cranes going around at the minute. But what was the Times was suggesting was the fact that international investors are still investing big into big cities such as Birmingham, and pretty much pushing out the locals. So it'd be interesting to see what the demographic is of Birmingham in terms of being able to afford these homes, because if we are seeing the bigger cities now getting into more competition with London, I'm not saying that's possible straight away, but maybe over the long term, these super cities that will be coming into the horizon, then maybe, just maybe, we're going to see house prices, flats, apartments prices going skyrocketing high, and indeed into the renting as well. Maybe the rentals will go up. So as these developers come over into Birmingham, as an example, will they put in these superb dwellings? And as it says in here, what I've just noticed was the foreign investors are cashing in the city, multi-million-pound regeneration and the opportunities to rent to young city population to Western Europe. So really it is about, making a buzz in the city, but now charging more money than they ever did before for the locals. And now there is a bit of a push out from that. It'd be interesting. I don't know if anyone's from Birmingham. If you're listening in tonight, what are your views? Is that true? Are we finding that Birmingham is now becoming an expensive place to live? And indeed, if that's the case, are you seeing any changes to house prices in Birmingham? Is there an impact here? Because there's going to be some impact, isn't there? Because we have this whole issue of London, where we're not sure because of Brexit, are people going to move away? Well, people need to work. But if Birmingham are putting so much effort into the infrastructure, just like Nottingham is, then are we finding a migration? And I'm not sure that's true or not, but that's just a good feeling that I've got, and it's not being really supported by too much other than the development of these other cities. But what are your views? Are you seeing this kind of regeneration indeed in your city, if you're from Birmingham or Nottingham? And if not another city, then tell me what's going on there. Is there a push for these super kind of apartments that we had decades ago in London? Are we seeing it come further north? Here's an interesting one. So the Express was writing about the Labour hatch to devastate buy-to-let homeowners after inheritance tax plan fury. Now, this isn't just about inheritance tax, but there's him, and less said about that, the better. But the article was pretty much saying that Labour, again, would be focusing on rent controls, tighter restrictions on the ability for landlords to evict renters on spurious grounds of essential rebalance, blah, blah, blah. And they talked about the IHT as well. And an interesting one that I have to, I'm being cynical about this, I have to say, but we need a fairer system of how we can ensure that wealth is more fairly distributed. That's one idea we are listening to as a range of ideas. Yeah, I just froze. That wasn't YouTube. That wasn't any technological blip. That was just me freezing. So what we're going to do is we're going to get people that work hard, that invest their money, and we're going to tax them heavily and then just move it around to the lazy ones that don't do anything. Is that what we're saying here? I just don't get it. If you're in a fortunate position, you've worked your butt off and you've tried and you've got out of your house without taking benefits and whatever else, yes, this is a rant. And unfortunately, there are people that are going to be so cynical about this video saying, oh, you shouldn't have a bigger benefit, blah, blah. I'm saying that people that have earned their money, why should they be taxed at the hilt and then give that money back into society for people not to work? I think again, I'm not saying that's what Labour are focusing on, but that's just always the way that Labour focuses, always tax the rich and then distribute it. I get it to a certain extent, but it's just yet another attack of landlords who built up their lives. They're being taxed in Section 24, there've been legislation changes, we've got licensing fees, and now we're talking about taxing them when they died as well, even more than now, to distribute the wealth fairly. What's fairly exactly, Corbyn? That's what I would ask. But, you know, just crazy, it says the Labour. I'm not a fan at all. I'm not a fan of Conservatives, if I'm honest. I think we've got real problems in this country. And it just goes to show you where we are. Another one, sorry, apologies for that. I did say I was going to do that in terms of rant today. Apologies if you've just turned you off, and hopefully I haven't. But I just thought I'd give you my honest views on things. I think sometimes we're in this world of not saying what we think, and we're in danger of not having an opinion. So I'm giving you mine, and I'm hoping that it's not too offensive. And by the way, you might agree, you might disagree, and either way, your opinion is right. Okay, so I'm not going to say, I'm going to try and say you're wrong, blah, blah, blah. If you have a feeling about something and you feel strong about it, then bottom dollar, I'm wrong, you're right. And let's be done with it there. So the other subject is lucrative buy-to-let continues to appeal to investors. And this is echoed across quite a few articles that I chose not to bring to your attention tonight. But it was interesting from the perspective of saying, the research of the survey that they did of more than 5,000 buy-to-let investors. Now, the one thing I would say about this is if you are positive about something, you are more likely to do a survey. And if you're negative about something, you might, if you're strongly negative about it, you might also have a strong saying about it. But if you're kind of, well, I'm not a fan of buy-to-lets anymore, I've got some property portfolios, you're not going to spend any time looking at surveys. So I do feel a bit skeptical about survey results. I think it's a great effort that we've got 5,000 buy-to-let investors, but it's such a small proportion over the whole thing. I'm not saying it's a bad thing, by the way. I think these guys who did it, Simple Landlords, they've done a great thing putting a survey, but I think we have to etch a kind of a bit of a a reality check in terms of saying, well, is this the population as a whole? And I would say not. But what it does say is 73% of those that were asked, I think are more the most positive ones anyway, are still see this as a long-term investment. So they are not seeing buy-to-let as the one that would be, you know, that they're exiting. To be honest, I kind of wouldn't have expected that to be any different. If they said every investor was asked or landlord was asked about what they're going to do, I think those numbers would be significantly different. But the reason why I brought it up was because I always like positive news. And this is positive from that side of things, to say, well, it's less volatile than any other industry. The one thing I do love about buy-to-let is that it is bricks and mortar at the end of the day. You know, it doesn't, not like a stock market share where the price could go from £15 down to a penny in a single day. What not only does it wipe out any income, which is dividends in the form of shares, but it can destroy your capital as well, just like that. So with bricks and mortar, at least you've got a bit more of a safe haven. You don't see this kind of shift of property values going down 80% overnight and then recover the next day because some city analyst thinks, well, I've overacted yesterday, I'll put the price up of the share. Numpty. But that's, again, another view. I'm not going to go off on rants. I better take my Prozac. Oh, man, where are my tablets? I better take those tablets quite quickly, haven't I? Whew, breathing exercises. Anyway, let's get on. So let's have a look at the FT. FT is always providing some great articles of late. And this one starts with the vast majority of buy-to-let landlords are not looking to grow. This is probably something I would echo in terms of the conversations we've been having with our clients. We used to have a lot of conversations about, well, I'm buying this property, I'm buying this property, I'm buying this property, what do I do? Now, again, there's two ways of looking at that. We have new clients coming on board that may not be asking those questions. We also may have clients that have been with us for a period of time and they know the answers that we would have been providing anyway. So maybe they're not asking those questions. But we have seen a cull of the kind of questions for new property investing, and it's all been around, well, what do I do with my existing portfolio? CGT, move it to a company perspective, and so on. So this article was resonating with our own findings, and it was saying the findings suggested the report was becoming more specialist landlords. So again, maybe last week and the week before that, I cited a few articles that suggested that the amateur landlords of 1-2 properties would sell up because they don't want the property anyway. They saw it as an investment, but because of Brexit concerns, there's no capital appreciation really anymore. And you've got legislation changes and licenses are, you know, painful for these guys. They are going to leave. And what's happening is that there's been a more of a drive from 14% to 18% of the more professional landlords making up that population, which doesn't surprise me at all. But a lot of them are still saying, well, we're going to wait and see. Now, on the waiting and seeing because of Brexit, we can't just call this cult of not buying property investments all because of Section 24 or HMO license rules or landlord licensing. You know, there's a lot of stuff going on, and I think we need things to settle down a little bit to understand whether once Brexit comes and goes, yes, I paused there as well. When is it going to go? I have no idea. The government don't even seem to know what they're doing. Rather than focus on landlords and doctors and IR35 and all that jazz, why don't you focus your time and effort on the most fundamental part of this country, which is Brexit, and getting it done properly? Anyway. So yes, so that's my view. Are you sick and tired of Brexit, by the way? Let's just rant and rave about this. Let's just kill this whole kind of property Q&A today, and let's talk about the government. Out there listening, do you think we have a numpty government, or do you think we have a capable government? Just write the word numpty government or capable government. Just really interested to see what their views are, because I'm just sitting in my chair. Yeah, sitting in my chair. and I'm astounded of what I'm seeing in this country. It is a farce, in my opinion. And I'd love to know what you're thinking, because how can we make investments, whether it's buy-to-let or shares or our kids' futures, when the people running this country don't seem to know what they're doing? Again, just my opinion, not yours. And I'm probably wrong, aren't I? Let's be honest. Or am I? And I'll let you decide. So put that in your comments box. Let's have a conversation on that. Get out your frustrations as well. Tell me what's going on with this country that you really want to change. And let's make it happen. Not tonight, that would be a bit too much. I'm not here all night. And I've just realized it's already 7:20. So, you know, let's calm things down a little bit, shall we? So I need to just move my banner because it's just got right in my way. So the next article, again from the Times, was talking about buy-to-let landlords owe HMRC hundreds of millions of pounds. Now, it does say that the number of buy-to-let landlords who have admitted not paying on their income from rent has risen by 145%, from 6,600 in 2017-18 to 16,000 in the following years, right? Now, my view is surely, just surely, and this just exemplifies what I'm talking about, the government just not having a clue. You know, you're talking about a house that's got a buy-to-let mortgage on it. Surely that person is collecting rent on it. It's a buy-to-let mortgage. You can't get any more obvious, can you? It's on the land registry and they're not at that property. So it's on the land registry under that person's name, and they're not on the poll in terms of their votes at that address, someone else's. So there are many ways of identifying which rogue landlords are ruining it for everyone else, like you and me, who tell HMRC everything we're doing, and we're the ones who's being penalised with legislation changes, licensing rules for HMOs and being elected. And these guys, the rogue landlords, get away with it. And my view is, isn't it really obvious? And this is another frustration. My veins are coming at my forehead tonight. The government are clearly stupid. They have got buy-to-let mortgage. Oh, right, okay. Let's just, where's my gin and tonic? I might need one of those tonight. But you know, you've got a buy-to-let mortgage, and they've got access to banks all over the world. And yet the buy-to-let mortgage, they can't see that and go, that property we're not getting rent from. So why aren't we doing something about it? Surely there must be a system for them to do that. Well, yes, there is a system, isn't there? But let's be honest, we'd rather create this making tax digital for VAT and then not use the technology that they've purchased into the system. Another screw up, if you ask me. But anyway, let's not talk about the government anymore, shall we? Let's move on, because I can just feel my blood pressure just raising every second as I speak. Are there any other positive news? I just feel like this has been a bit of a rant and I might need to stop. So let's have a look at the buy-to-let professionals denied best mortgage deals. Right? This is a bit of an interesting. This came from the Times again. And by the way, I'm not looking at just the wide article press that's out there. I have done the scour of other publications as well. So I'm not saying that the tabloids or the broadsheets, I should say, are the only papers I read or look at. Not a chance, but they do have a lot of good things to say. But it does say about the limited company rates are higher. Now, one thing I would say is buy-to-let professionals denied. Notice the word professionals, and then underneath that, they say landlords who set up companies. So by inference, they're even saying that professionals are those landlords with limited companies. Interesting. Now, I've not said that I agree with that, because I've always suggested to people that you may or may not need a limited company. And the limited company really is there not for professionalism, but it's there for tax and getting that right. You don't need a limited company at all. I can rest assure you on that. And I'll talk about that later on, because we're doing the client FAQ where that has come out. So I'll talk about that later on. But what they're saying is that the rates in limited companies are higher than that of individual names. So 2.99 was the mortgage works for a limited company versus 1.8% for a fixed 2 years with the post office. The post office? And so yes, you can get mortgages now from the post office, which is really interesting in terms of the rates being so different. But I remember that the rates were about 1.5% more. Well, if it's, let's say it's just 2%, then it would have been 3.5%. So I think there is a kind of, that bridge is now closing in into the rates that have been offered to limited companies. And you have to kind of have a bit more of an increase in limited companies because there is a greater risk for the banks. So I do understand why rates might be higher. But again, what they're saying is that their buy-to-let professionals denied best mortgage deals. And I'm not sure I agree with that. I just think that's always the case. And it's not the fact that they're being denied. It's not a conspiracy theory. It's just the fact that limited companies are higher risk to the bank. So I kind of felt this particular article, I can understand it. I just brought it up because I thought, well, isn't it interesting how they've been making a reference to professional landlords being in a limited company, which for me, having a limited company does not mean you're professional or unprofessional. Just having properties in your own name, nor should we look at it from a perspective of glamour and perspective. And the fact that there's mortgages, you know, I don't think it's conspiracy at all, but maybe it's just the way they've written the article. But I did find what was interesting was the rates that they cited and it being 1% different. But again, that closing in is ever clear to me. The other one, which is from the Mortgage Solutions, so they talked about buy-to-let pricing sees unprecedented drop in July. And again, this just talks about there's a greater, wider choice of mortgages and the fact that the rates are falling. So just an echo of what else is being said about this. I'm sure, hold on a minute, what's happened here? Here we go. So this is the Telegraph and their article of buy-to-let landlords warned over zombie bank mortgage risk. And what was really interesting, the Section 24 and the legislation changes does not just affect landlords or tenants. It's funny enough, this is the first time I thought, oh, of course, yes, that's the next step. It's going to affect the banks. So the banks are the ones now thinking, well, what do we do with this sector? Is it really lucrative enough for us to go into? And this article referenced quite a few companies that are leaving the sector of buy-to-lets, such as Tesco announced to remove itself from the industry altogether. So not only are we seeing a reduction into the number of landlords, which has been a bit more professionalized. I'm not sure I used that phrase, but we're also seeing a reduction of banks as well. So even though there are more products, what that is telling me is that there are specific banks which are opening all their options up to landlords to get them into their kind of bank accounts, if you like. And therefore, we are going to see a reduction on both landlord and on the bank side of things. Will we see that on tenants, you know, in terms of the type of tenant that we're going to see? It's just going to be an interesting journey that we are going to be on in the next 2 to 5 years, I would say. The Telegraph again talked about the buy-to-let squeeze, fuel surge in capital gains bills as landlords sell up. So this is the amateur landlords and not the the professional landlords in all of this. But it's saying that HMRC have hauled in a record 9.2 billion. Wow, that's a lot of money, isn't it, in terms of people giving up on their properties. So 18% increase on the CGT, which they didn't see as much as they expected on stamp duty. It's interesting for first-time home buyers because they destroyed that. But what they have done is they've realised that stamp duty land tax might fall, and CGT has replaced it somewhat. So it's an interesting one from that side. And by association, Eleanor Harvey wrote a great article, worth reading, by the way. So by association, and she wrote how to succeed as a buy-to-let landlord in 2019. Quite a few things that she talked about, but what I did pick up again on the theme of professionalism and limited companies, there again, people are suggesting that limited companies are the way forward because Section 24. Yes, no, agree with it, disagree with it, but depending on your personal circumstances, and choosing the right investments, such an important element as we go into the future of our investment journey. Choosing the right investment is so much more important than it was before. I appreciate you could make money in buy-to-let investments, do it up, finance it, and then move on. Now those options have been taken away because of Section 24. You're not allowed to offset mortgage interest. So the first product you get is a principal aim is making sure you sweat that asset and get the best return investment or absolute cash returns on that property investment before you buy 2-3 more of dead duds, which I've done personally. So I can only talk from experience that I've bought properties that I probably shouldn't have done, and I should have spent more time on the due diligence. I've scrimped and scraped a little bit in certain areas, and now it's really making sure you do your due diligence first time when you're looking to buy a buy-to-let property investment. I'm not sure why I chose this one. Oh, okay. Just again, the Times coming with cheaper mortgage rates for new buy-to-let landlords. And that was pretty much it. So in terms of the articles, but there's quite a lot in the articles. So let me just have a look, see if you guys have responded with anything. I'm going to kick everything off. So wow. So let's just, there's a lot more comments than I expected from last week's, which is good to see. So I'll have a read of the live chats later on. I will cover that off. But thank you ever so much for, yeah, I will come back in terms of what people have been saying later on. Oh, my screen's going really crazy. That's an interesting one. It's now gone into what I can only call it hieroglyphics. Moving on in terms of client FAQ. So I'm going to do a new share of my screen now. So let's just do a new share. And this is things that what people have been asking us, not us, but the tax guys in the office. And the first one, remember what I said about capital gains tax, that there's been a surge of capital gains tax. I rather suspect that a lot of landlords are paying far too much capital gains tax than they should be paying. So that 19 million or £9 billion, sorry, that HMRC collected from capital gains tax receipts probably should have been in the region of 5 billion actually. So I would, like I say, I think there are a lot of people paying more capital gains tax than they should be. I've often said that capital gains tax, in fact, is a option. It does not need to be paid. There are ways of avoiding capital gains tax altogether. And a couple of clients have been looking at selling their dead assets or the ones that aren't generating the best return on investment. So I always say to people, if you've got a buy-to-let property investment and it's not doing that well, then what I would be suggesting to you is sell it, but you sell it in the best possible way and get some tax advice done. But here's some couple of things for you. I'm going to just explain to you capital gains tax is based on the profit on that. We're taking from the sales price of a property, less the sales fees, less the purchase price of the property, less the purchase acquisition fees, less capitalized refurbishment costs that you did not claim against your property income. So capitalized costs could be if you put in double glazed windows and your accountant wrongfully took that cost out and said, no, that's capital, make sure you remember that for when you sell the property, and then you forget. And that's another good reason, fun enough, to use things like Xero and QuickBooks, because if you are moving an item from the profit and loss, as in expenses against your income, and you say, well, actually, the accountant's saying it's capital, then you would have to do a movement, a reallocation of that invoice, and you would put it as capital, and it would sit as a building cost. So when you do eventually sell your property, you would look at your balance sheet inside of your Xero or QuickBooks, and you'll know exactly what your capitalized costs are. But this is such a big area that most landlords totally forget that they've got capitalized expenses and therefore do not claim the right CGT allowances and therefore pay more tax than they need to. Capital gains, if you are thinking about selling a property, then it's probably best to start thinking about selling that property before April 2020. And that's especially the case if you've lived in the property. Why? Well, because the government are squeezing the CGT from next year, whereby they're saying, one, the residency test, so private residency relief, is going to be reduced from 18 months to 9 months. If you've lived in the property, you're going to be only allowed 9 further months from when you leave the property, which will be tax-free, and therefore everything else will be taxed. Well, that was 18 months, so time is ticking, and you will end up paying more tax than before. And lettings relief, well, in my view, the way that they've rewritten lettings relief is pretty much a scrapping of it. So lettings relief used to be the lower of the gain made, £40,000, or letting or the private residency relief. But what they're saying now is that, well, let me just go back actually. Lettings relief was claimed when you would have a property, you lived in it, you then moved out of the property and you moved the tenant in, and you could then claim this letting relief. What they're now saying is from April 2020, that is being changed so that the tenant has to live in the property at the same time as you, which is pretty much the rent-a-room allowance of you have to be in the property at the same time. So ultimately, lettings relief, no one's going to do that, let's be fair. So I think pretty much lettings relief should be seen as scrapped. And we must remember that you can mitigate CGT altogether if you invest into enterprise investment schemes, seed enterprise investment schemes, or venture capitalist trusts. I am not, I shall repeat, I am not a financial advisor, and therefore I'm not going to talk about the investments of those. Simply, all I'm going to say to you is that you could reinvest that money without paying CGT. And some people say, well, you're only deferring it. Well, yes and no. There are ways of deferring and deferring indefinitely. So do remember that out. We're talking about limited companies. Now, it's interesting. Here we go. So a couple of people talk about limited companies. Just want to re-echo the point of this. And it's training that we've had with our guys in the office. We are seeing a lot of people that attend a networking event, they've been to a course, they've seen something on Facebook, which if it's on Facebook, it must be true. They've seen something on LinkedIn, or they read something in an article, and it basically said that Section 24 means that if you're a high rate taxpayer, you should use a limited company. Really? Because if you're a high rate taxpayer in a paid job, but you're looking to replace your paid job with property investment income, you might decide to give up your PAYE job within 2-3 years' time. And if that is the case, then you've all of a sudden got these properties inside of a limited company paying more mortgage interest, which we covered off earlier, and they're stuck there. And you've now got to extract money out of a limited company, which is less tax efficient than if the properties were in your own name. So don't just set up a limited company thinking, well, I'm a high rate taxpayer. The general answer is, and I hate that word, general answer, because there is no general. You are unique and you are an individual with different circumstances to everyone else. So please don't go onto Facebook and say, this is my situation, because they're going to talk to you from their frame of reference for any NLPers out there. So they'll only tell you what they did because of their circumstances, their situation, their future plans, which has no reflection or bearing on yours. So please, please, please don't just go off on what someone else has said in a networking event, Facebook, or an article that someone else has written and say, yes, I agree with all that, and that's what I need to do. You need to make sure you take an informed, balanced view of everything you do, and then you can take an informed decision what's right for you, your spouse, your kids, and that's ultimately what it's all about. So do you need a limited company? No is the answer to that. But if you do go for a limited company, there are so many things you can take out of a limited company. So you could take out, as an example, you could take out, and assuming that you have no other form of income in your own name, then you can take out 8,628 wages, assuming, again, no other form of income in your own name here. That can be taken out of a limited company, which reduces corporation tax. The rest of that then could be dividends of 3,872, which then gives you this personal allowance of 12,500. But it doesn't stop there. The fund doesn't stop there. No, 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 no. You can allow yourself to take another £2,000 worth of dividends, because as long as you've got profits, by the way, because you're given that extra allowance from HMRC. What we do used to be 5,000 times. But ultimately, if you're a husband and wife civil partners, you could take out of a limited company £29,000 without paying any form of tax, which isn't a bad size income stream when you think about it. Paying family members keeps coming up time and time again, where people say, look, I've got a child, can I pay them a wage? So 14, 15, 16, no, no, no. If you pay a minor, and a minor defined by the government really is someone who is a dependent under the age of 18 or in full-time education under the age of 21. And therefore, if you're paying them any money from your business, you will be seen to be collecting that money and you will be subject to income tax. So please don't do it. Your limited company can do other things. So it can take out pension contributions. Your limited company can pay into that. You've got key person insurance as well. You've got medical checks that you can pay out of your limited company. So VDU work and well person check if you want to do that on an annual or biannual basis. Your company can pay for those as well. You've also got the fact that your company can pay for staff celebrations up to £150 per annum per person. Make sure you don't go over that allowance because you'll be taxed in full. One thing that's not in here is, which is something I put in recently, is that you can show, if you've got an overdrawn direct loan, so let's imagine that you bought a £100,000 property inside a limited company, you've got £75,000 mortgage, but you personally put in £25,000, you can legitimately charge your limited company interest. And that interest, funny enough, will be tax-free up to £1,000 for basic rate taxpayers and £500 for high rate taxpayers. And basically what you would do is you would do one return, maybe at the end of the financial year for the company, do a CT61, which is a form to HMRC, and yet more forms, I know, I feel your pain. But you have to do the CT61. I don't know what CT60 is, or 59, 58, 57, 56. But you have to do a CT61, and it tells HMRC that it's deducted 20% income tax from you. So I've just said it's tax-free now, so that it's taking 20% tax from you directly, but you would claim back that tax relief on your self-assessment. So there is a way to claim interest from your company, but you need to have a direct loan account, and you can't be an additional rate taxpayer because you don't get a tax-free allowance. There's other things you could do, like vouchers as well. So £50 voucher each time, and you get a maximum of £300 as a direct each year. So not a bad perk really, but you can't do it more than £50 each time. So my view is for the kind of 10 months in a year, take your £10 vouchers, periodically, maybe 7-8 months in a year, and then that way you've got your vouchers for up to the £300 in a given year. So do that towards Christmas time, always a good thing. And that's pretty much it. That's the only thing I want to get on. I talked about holding companies, but I don't really have time, so I want to make sure I do the FAQ bit. So I might cover holding companies next week. If I reduce the amount of rant time, then I'll have a bit more time for you on the holding companies for next week. So let's just focus on that. I'm going to stop my share now because it really annoyed me last time I did that. So I'm going to stop the share. There you go. So you're seeing me a whole. I'm like, oh no, please take that away. And that's fine, by the way. That's okay. I do get that quite a lot. So in terms of the questions that you've been setting, I'm just going to go over to that now, and let's just see what's been happening. So John, good evening, John. I'm going to have to do a bit of a a bit of a, oh no, I can't increase the sign on my screen. So I'm pretty blind at the minute. So, well, not at the minute, I'm just blind full stop. So let me, oh no, I've ruined it now, John. I was going to try and get to your question, but now I've messed up and I can't get things back. Oh my gosh. So let's just go in terms of what John was saying, and I'll just squint a little bit like this, like Mr. Magoo. Can you cover about director's loan extracting if you're a higher rate taxpayer? John, it's as though you kind of read my mind. Extracting money out of a limited company, as I've just described to you. If you've taken that £25,000 loan to the company, you can take that loan back whenever you like. So there's no limitation or restriction on you at all. John came back and said, they say mortgage rates are falling, but not HMO mortgages, right? I think we will find HMO mortgages are always going to be slightly higher, and that's because of risk. So it's not the fact that they're trying to penalise anyone, but banks do need to protect themselves from a risk perspective, and single lets are less risk than HMOs. So that's why you're always going to see the interest. Now, Jan, it's replied numpty, quite agree. I'm hoping you're calling the government, not me there, but yeah, I would agree. And John said you would see a more cohesive reaction in the crash. Well, very true. Yeah, very true. Jody, good evening. Maybe your first time listener. I've not seen you before, but I'm starting my journey in the world of buy-to-lets and been advised that I need an exit plan. Good point. Everyone needs an exit plan. You need an entry plan, never mind just an exit plan, which people don't do. So I would start with the entry plan and then the exit plan, but absolutely you need both. I don't understand what the options are, if any. Can you advise on this, please? I think, to be honest, the plan is really around you. I would start in saying, where am I now? Why do I want property? The big question is why? What do you want out of it? No one buys a buy-to-let property investment just because they like houses. If that was the case, then they would just buy paintings of houses, surely. But they want money from them, and that's the ultimate thing. So you need to think about, well, what money do you want? When do you want it? Now. Oh, sorry, that's a completely different thing. But you need to understand, well, what money do you need? Why do you need that money? And do you need it to grow? Are you looking for capital appreciation, or are you looking for income? What about your family? How long is this investment journey going to last for? It's really taking time to understand your life, to be fair, Jodie. And it's not one I would say that there is a generic plan that you can do, but maybe start with Googling life plan and then looking at what those segments are and using that for your buy-to-let property investments. I think that might be a good start. Claire's Hunter said, on the limited company point you made, if I don't own any property personally and I set up and buy through a limited company, will I lose my personal stamp duty allowance when I do decide to buy my own home? If you have a property in your own name as a buy-to-let and not a home, then when you do buy a home, you would be subject to the 3% SDLT surcharges, which you're referring to. If you buy in a limited company structure and you have no homes at all, so the buy-to-lets are in the company name, not your own, then you would not be subject to the 3% SDLT surcharge because you don't have any properties in your own name. So that's maybe a good thing that you're kind of referring to. So I think that's a truism of many people. And I tell you where it really is painful are those people that have inherited property from, let's say, the grandparents, and now they've got this property that they don't want, but it's there as an investment. And the government's saying, well, you've now got a property. So if you want a home, you're paying the extra 3% SDLT surcharge as well. What? I didn't even make that choice. So now they've got to sell the property, go through all that buying, blah, blah, blah. So it can create problems for everyone concerned. Nahid is saying, hi. Good to see you as well. First time listener, hopefully. Converting quite a few people now. So I'm hoping this is entertaining as well as informative. I want it to be more entertaining, to be fair. So I'm taking rules and regulations from Deadpool. Anyway, enough on said about that. So let's talk about Ryan Reynolds. Let's talk about Naheed and his comments here. So if a company A, invest or loan with interest to the company B, property, what will the corporation tax be? Well, tax is based on profits. So your income of the rental property inside the limited company, less the expenses, is its corporation tax. You may decide to extract money out of that company, which we covered off earlier, and then you'll be subject to income tax if it's going over and above the thresholds I talked about previously. He did go on to say, do the company need to pay corporation tax on the whole rent amount or the interest company will receive from company B? Can you advise on that question? Again, the corporation tax will be charged on the profits. So interesting enough, if you charge interest on the loan that you provided to it personally, then interest would be a cost to the company and deducts the profits made and therefore reduces corporation tax. There is a danger though that if you paid yourself £1,000 interest from the company and you move accidentally from being a basic rate taxpayer to a high rate taxpayer, you're now being subject to higher tax rates. So you do have to be a bit careful with that as you go ahead. Gles Hunter says, thanks, Simon. That's what I was hoping you'd say. I can't even remember what I said. Maybe I've just taken those tablets and it's just whacked me out now. It was my rants. My blood pressure went up. My blood pressure has gone to my head. And now everything I'm saying, it just feels like they're all butterflies in front of my eyes. It's really a bit of a surreal moment for me at the minute, so I have to say. I will go for a lie down. Let's see if there's anything else. Anyone else for anything else? I have to ask that question, see if there is anyone asking some impending questions. I'm not only drinking water, so it's probably the dehydration now that's getting to me and making me suffer. Let me just have a look, see if there's anything up. Live chats, which sometimes, weirdly, YouTube always does something different. There's nothing on there at all. Okay, so fair enough. Let me just see if there is anything on there. No, there isn't. So, someone just said, Jan, it's just come in. You really must take the tablets regularly. Not regularly enough, Jan, apparently. So let's just go on to the other side to it then. Let's do a new share. Okay, TC. So we've done client FAQ, we've done your Q&A, perfect. So don't forget, I will be here next Monday night at 7 p.m. till 8 p.m. I do have a new video on Thursday, by the way, the new video this month, which if I can just show you before I go, I'm just going to just do a new share. Oh my gosh, what am I doing? Oh my Gideon, as someone said the other day, which I found really interesting. I wasn't going to swear, even though I did go. It wasn't a swear. It wasn't. I'm not putting money in that swear box again. No. Let's have a look at the. Oh no, I've done the wrong thing. Trying to show you a YouTube video and it's not worked. So let's just go. So the video that I've got coming up on Thursday, which I always kind of forget about, is videos in here. I've got a video coming up. Set reminder, 25th of July. How to buy buy-to-let property investments. No, it's not that. It's about inheritance tax planning and limited companies. And I've got another one. Sorry, here you go. Hopefully you can see these two. So the 10th of July, which is this Thursday, I've got a premiere. So you can set a reminder, interesting enough, on my videos now. So if you want to go on our videos, set the reminder and it will notify you when I'm releasing that video out, which is about 8:45 there, 8:45, and it's all about holding companies. So I said I was going to talk about holding companies. I'm not going to now because that video is being launched on Thursday, and the following Thursday, I talk about how to mitigate inheritance tax through the use of growth shares again. So that's the following Thursday on the 17th of July. So there's quite a lot of video content going on there. But let's see if there's any last questions that's come up. There isn't. That's fine. what I'm going to say is tonight has been entertaining for me as ever. Thank you ever so much for joining me. And I look very much forward to seeing you in the next session, which is next Monday. Don't forget the video on Thursday. If you do have any questions, feel free to put those into the question box. But please press the like. If you've found this video interesting or useful, make sure you give it a thumbs up as well for me, because that would be really, really useful for me. I'm just going to stop the share so you can see me. Yeah, give it a thumbs up. Even share the video if you think there's people that should be listening into this stuff. Not the rants maybe, but maybe just the kind of useful, informative stuff. Then maybe share this video as well. But at least give it a thumbs up. Let people know that it's been useful for them. And I look forward to seeing you next Monday at 7 p.m. My name is Simon Misiewicz from Optimise Accountants. Have a great week, and most important of all, have fun. Thank you again. See you soon.